Running a business often feels predictable when sales are steady, customers are paying on time, and expenses remain under control. Unfortunately, business conditions can change much faster than most owners expect. In this video, you will learn why every business needs a cash reserve plan. Reason number 1, the mistake that can empty your business overnight. Every business faces uncertainty, regardless of its size, industry, or years of experience. Even companies with strong sales and healthy profits can experience temporary cash shortages because business income and business expenses rarely occur at exactly the same time. Customers may pay invoices later than expected, important equipment may require emergency repairs, or unexpected legal, tax, or insurance costs may appear without warning. Seasonal businesses may also experience months where revenue naturally declines while fixed expenses continue. Without available cash, business owners are often forced to rely on expensive loans, credit cards, or emergency financing simply to keep operations running. Those quick solutions usually increase financial pressure because they add interest costs and repayment obligations at the exact moment the business is already under stress. A well-planned cash reserve changes that situation completely. Instead of borrowing immediately, the business can use its emergency funds to continue paying employees, suppliers, rent, utilities, and other essential operating expenses until normal cash flow returns. This financial cushion also gives management valuable time to evaluate solutions carefully instead of making emotional decisions based on panic. The goal of a cash reserve is not to eliminate every business challenge. The goal is to provide enough financial breathing room to solve problems without placing the entire company at risk. Businesses that survive difficult periods are often not the ones with the highest sales. They are the ones that prepared financially before challenges appeared. Reason number 2, the cost of running out of options. One of the biggest advantages of having a cash reserve is the ability to make decisions based on strategy instead of urgency. When a business has very little cash available, almost every decision becomes a reaction to immediate financial pressure. Owners may accept low-profit customers simply to bring in quick cash, delay important maintenance, postpone marketing campaigns, reduce employee training, or purchase lower-quality materials because they seem cheaper in the short term. While these choices may solve today's cash problem, they often create larger financial problems in the future. Poor quality products increase customer complaints. Delayed maintenance leads to expensive equipment failures, and cutting marketing can reduce future sales. A healthy cash reserve removes much of this pressure. It gives business owners the confidence to think beyond the next few days and focus on long-term business success. Instead of asking, "How do I survive this week?" they can ask, "What decision will strengthen the business over the next several years?" This shift in thinking often leads to better investments, stronger customer relationships, improved operational efficiency, and healthier profit margins. A cash reserve also allows businesses to negotiate better deals with suppliers because they can pay quickly when discounts are available. They can hire talented employees when opportunities arise instead of waiting until finances improve. They can continue investing in product development, customer service, and business improvements even during temporary slow periods. Most importantly, owners experience less financial stress, allowing them to think more clearly and lead with confidence. Businesses grow faster when leaders have the financial flexibility to make smart decisions rather than desperate ones. A cash reserve creates that flexibility by turning financial uncertainty into manageable business challenges instead of full-scale emergencies. A cash reserve also gives business owners the confidence to say no to opportunities that are not financially healthy. Without available cash, many companies feel pressured to accept every customer, every contract, or every partnership simply to generate immediate income. This often leads to low-profit projects, unrealistic deadlines, unreliable clients, and unnecessary operational stress. When the business has a strong financial cushion, management can carefully evaluate whether an opportunity truly supports long-term goals instead of chasing short-term revenue. The ability to reject unprofitable work is just as valuable as the ability to invest in profitable opportunities, because protecting resources is a key part of sustainable business success. Reason number 3: the difference between surviving and scaling. Many business owners believe that keeping extra cash in the business slows growth because that money could be invested elsewhere. In reality, a well-managed cash reserve often makes growth faster, safer, and more sustainable. Businesses that constantly operate with almost no available cash usually spend their time solving financial emergencies instead of building the future. Every unexpected expense becomes a crisis, every delayed customer payment creates stress, and every business opportunity becomes difficult to pursue because there is no money available. A cash reserve changes this completely. It creates financial stability that allows owners to focus on improving products, expanding into new markets, increasing marketing efforts, hiring talented employees, and investing in technology that improves efficiency. Growth becomes a planned process instead of a risky gamble. When lenders and investors evaluate a business, they also pay close attention to financial stability. Companies with healthy cash reserves often appear more reliable because they demonstrate responsible financial management and lower risk. This can improve access to financing, create better borrowing terms, and strengthen business credibility. A cash reserve also helps protect the company's reputation. Employees receive their salaries on time, suppliers are paid as agreed, and customers continue receiving consistent service even during difficult periods. These actions build trust, and trust is one of the most valuable assets any business can have. Building a cash reserve does not happen overnight. It requires discipline and consistency. Owners can begin by setting aside a small percentage of monthly profits, reducing unnecessary expenses, improving collections from customers, and reviewing cash flow regularly. Over time, those small contributions grow into a meaningful financial safety net. The purpose is not to accumulate idle money forever. The purpose is to create financial strength that protects the business, supports smart decisions, and provides the confidence to pursue future opportunities without putting the company at unnecessary risk. If you found this video helpful, then like, share, and subscribe this channel to get future videos. Thank you for watching this video.